The Business Journal Roundtable Series is sponsored by Advanced Technology Partners.
How can someone build wealth while minimizing tax liability?
I think the easiest way is to have an ongoing relationship and conversation with both your tax professional and your financial advisor. I think it's very important that those two pillars in your life are communicating on a regular basis, sometimes even without you. Most of the people in this room I have a very personal relationship with for our clients. When they're thinking about making a big move in the market or realizing a gain or reallocating a portfolio, they're staying in touch with us. We're adjusting things from a tax perspective and saying, hey, we have this loss to consider, or we have this other life event that's happened in this business. So if you can ensure that your financial advisor and your tax professionals are constantly in some form of communication, then you can minimize the risk that you're giving away any extra of those dollars to your favorite uncle.
Yeah, there's some, fairly thoughtful and sophisticated ways to minimize tax inside of investment portfolios. Vanguard did a study, I'm sure a lot of people on this panel are familiar with, the Advisor Alpha study that identified that there are tactics that you can do. One of them is asset location, where you're just parking the right assets in the right containers. That can add up to, in this case, 0.75% to your annual return by doing so. So I think when we look at investing, it's, as I said earlier, it's not what you make, it's what you keep. And there are tactics, particularly in the non-qualified side, of the investment world, to where, you can tax manage that portfolio in times of volatility, doing things like loss harvesting, where you're getting something out of the volatility by pocketing losses, carrying those forward and netting those against future gains. There are a lot of things that one can have done inside of a portfolio that keeps that net as high as possible.
Great comments. I would say relationships that I have, the strongest relationships that I have, the most experienced clients that I have. Not only am I part of a trusted advisor to them, but there's also a team approach, and a team approach is going to be your tax preparer, a lot of times various types of attorneys as well too, and it's very rare where we're making large planning decisions without kind of the group discussing that in detail. Again, during the volatility, and it was tough because it was also tax time, but we took advantage, as Jonathan was talking about, tax loss harvesting. Also took advantage of a lot of Roth IRA conversions during that period of time too, but I would not have made, especially on a Roth IRA conversion, I would have made those decisions on my own without consulting with the client's tax advisor, especially, just because those are pretty big decisions. And it's best to have as many minds and the clients in comprehensive team involved in those decisions.
Yeah, I like to say we're tax knowledgeable, not tax professionals. And if you want your portfolio or whatever your situation to be most optimized, you take the team approach. Just Tim, kind of what you said.
I think one other tactical point that's worth expanding on that Jonathan mentioned is if you're solely focused on just putting money into your 401k and not putting money into a brokerage account, putting money into a Roth portion of the 401k, then you're going to have a lot of limitations when it comes time to taking that money out later, which could cause tax problems in and of itself. If you only have money into a 401k, and let's say that one of your children is getting married and you need to take that money out of somewhere, and the only place that you have to take it out of is that 401k, that additional taxable income that you're taking onto your tax return that year could cause other issues, could not only cause you to pay more taxes, but could put you in a situation where now all of a sudden your Medicare premiums are higher or your Social Security is more taxable and things like that. So sometimes it's just as important to consider where you're starting with those dollars and what you're allocating into those into those buckets, into those containers, as Jonathan mentions, to ensure that you're in a position where you can pull the money out in the most tax efficient way possible later.
The Business Journal Roundtable Series is sponsored by Advanced Technology Partners.